Hi, this is Randy Finney with Right Side of the Chart, and this is an intraday post-FOMC update. We have the Fed meeting, the Fed meeting and announcement out of the way. Quarter point as was expected by the market, so nothing big there. And the usual, we're ready to stand by and adjust to conditions. In other words, they're open-ended. You can almost write the Fed statement. They'll make any adjustments as needed, depending on what the economy or really what the stock market does. Stock market drops 10+% from here, it'll throw a hissy fit, and the Fed will be much more likely. The chance of a rate cut will go up. If the stock market rallies to new highs and can somehow hold those, the chance will go down. So right now, this is what happened. I don't know if you can see it here. There's a daybreak line right on this level. Not a daybreak, an hour break line. There's 2 p.m. right there on this line here. So you can see as I was drawing, this is what I talk about. The initial rip or dip is often not the one that sticks, or at least it's a reverse. So there's quick drop. Had you shorted that drop thinking okay, we're going down, then you would have been stopped out most likely here. Had you bought long on that rip saying okay, that's over and we're going higher, same story. And so here we are right now. Let me give you some things to watch, and we'll try to figure out where we go from here. 60-minute chart, QQQ. Here's that trend line, solidly broken today now after the Fed, as well as that 191.18 support. So this is bearish. This says unless it's reversed, we've already had the initial knee-jerk reactions. Markets had some time to digest. Looks to me like we're going to go lower, so we may not get that divergent high unless there's a reversal. Remember, the dust sometimes takes even 2 days, sometimes 3 to settle, but so far probably good for the or I will say bearish, good for the bearish case here with a breakdown, and so far an impulsive move following the breakdown of the trend line as well as that 191.18 support, and that should bring us back for another test of the top of the August trading range right there, which is at 189.40. We've already tested it once, so I wouldn't be surprised if we come down again if we go down through it. But again, I caution you, the day is young, so I'm going to give you some other levels to watch just in case they reverse this thing here. SPY, trend line, uptrend line on the 60-minute chart I've been highlighting for the last week or so. Breakdown, we traded sideways. Again, that was to be expected. Before the Fed, you're not going to make any big moves. Now the Fed's out of the way, and so far we have a pretty big red 60-minute candle. If we can't recover this 299-ish support right here soon, this may be a momentum-fueled overshoot, or overreaction, or the initial knee-jerk reaction, I should say, to the Fed, which you have to take with a very large grain of salt. So if that's just an overshoot and we regain 294, that still or could certainly open the door for that move up to put in another marginal new high like I talked about before. Did not try to drag that. I tried to add another line here, and that would look like that. But let me give you some levels to watch it that should give us some clues as to what happens here. So I'm going to go through the top components of QQQ. As I like to say, any index is simply a sum of its parts. So on Microsoft, these are little micro levels, but they're levels I'm watching. And take this collectively. I'm not going to go through all the components, just a handful of the top weighted components. So I have this trend line here, certainly significant right there if that breaks. And then I had a little triangle right here. We had a breakout. That's pre-FOMC. As I say, whipsaws are to be almost expected leading up to the FOMC meeting. So there was a breakout above a fairly well-defined but short-term. This is a 60-minute chart, by the way, guys. If I didn't make mention, all the charts we've looked at so far, we'll stick with for right now, are 60-minute charts. There it is. Now, so we're testing that uptrend line right here. Probably best fit right there. We're starting to crack it. Any more downside from here as I do this video, if we continue lower, that's going to increase the odds that we take another leg down. Otherwise, we're going to hold this support and reverse here. That's Microsoft. That's just one. It's not the whole market, but we got to look at each of these and then try to take it in. So here's Apple. Here's a trend line that I have on Apple. Not the best to find, but then we can put it somewhere like this. And it's below that trend line. You have a little bit of support. I could put a line right there. Minor. These are all unless I say otherwise, a lot of these are minor support levels. So there's a minor support level, and it's clinging to that right now. So as I'm doing this video, again, just to go back to where we were, QQQ is at 190.50 or so. I think we're at a pretty important level that says if we go much lower, we're going to then open the door to the next wave of selling down. If we can hold these levels and rally off there, because again, I just showed you one, now two. Apple starting to crack, definitely broken down below the trend line, minor support here. And it gives that up, then it probably continues on down. Let's see, something that you have to keep in mind too, even though I'm focusing right now on the 60-minute charts, is the bigger picture for Apple. Should it continue much lower, we'll have another failed breakout of this big 216.41 level. It was very, very important, well-defined support back here when Apple broke out to new all-time highs, put in a divergent high. That's why I don't chase breakouts to new highs that are divergent highs, and that's why they usually fail. Biggest drop that Apple had in years, right there, many years, came from that breakout. So that made it an important level. We tested it again, boom, rejection. Tested it here, we did intraday breakout during earnings, and then boom, another rejection. So far so good for the bulls. If they can keep it above 216.41, and this again, top component, one of the world's most beloved and widely held stocks. Watch this one. If 216.41 gives way with conviction, meaning a big red candle, especially at close, and then to seal the deal, this uptrend line right there, that would mean that this was a failed breakout. And from the looks of the charts, I'd put good odds that it will fail. Why? Here's a negative divergence, right? Divergent high right here, divergent high, divergent high, divergent high, divergent high. So wash, rinse, repeat, and it hasn't happened yet. There's the potential for this divergence to be burned through, but again, that's why I'm not going to go over all of the time frames on all of these stocks. We'll get back to the 60-minute charts, just look at a few more. Amazon, you can see a trend line here. That would be bearish if broken, bullish if held above, and Amazon is flirting right now with this pretty decent support. I have it about 1797. You can see reactions here, reactions from above and below, quite a bit right there. So that's on the 60-minute chart. That would be a pretty important level. If it goes, there's a minor support level here in between, about 1770, but then very big support at 1748. I think it's lights out for Amazon if that goes with conviction. But support is support unless broken, so that's why I'm doing this video. These are all the levels to watch, and again, it's not coincidence that all these top components of QQQ are sitting on support, and right around the time QQQ is as well. Amazon, Alphabet, we'll look at Class A. Little minor trend line. I'm not crazy about it, but there's some minor price support too at 1221. And again, the more of these that break, not just little intra-period breaks. You can see that candlestick wick, the skinny part, means it was just a momentum-fueled overshoot, following that thrust down after the FOMC announcement, and we're basically right on it right now. Yeah, I'll try to wrap it up so I can get this video out to you guys, because this is certainly time-sensitive stuff. Facebook, let me see if I can give a trend line that has, I'm not crazy about it, not a lot of reactions, but I'll just throw it in there. But you can see I have it at price support here, about 185.82. And again, these are all levels. If and when they go, that should be it. Last one, we'll just cover Intel. Intel, I believe I've already covered this chart here. 60-minute chart, we had a bearish rising wedge pattern breakdown. That's a sell signal all day long. Clean sell signal, negative divergences confirming the bearish nature of the wedge. We've fallen down to that 6140 target / support. It's starting to crack, and although I do have a minor level here, I'll give it to you just in case it holds. I think we'll come down here to the $50 level, at least on Intel, and that should certainly impact the semiconductor sector. So there's levels to watch, and should we happen to reverse today, maybe we can draw a few downtrend lines. This is not very clean, but one to watch. Maybe it'll form with some more reactions. And then, a little minor, you can look at these reactions. There's a gap right there, so we can look at some resistance levels overhead as well. Here's what it looks like on NQ, the 60-minute chart NQ. If that, as I said before, that is enough to give us a right shoulder. We could have pushed up, and now it doesn't look like we're going to, at least at this point. We're coming up on that neckline for that head and shoulders pattern. So let's just say right now, I can tell you right now without having to guess or anything. It's now we have the makings of a pretty much fully mature almost fully mature. We need to touch that neckline to complete the pattern, but I'm talking a mature head and shoulders pattern. So I'm going to, at this point, remove the question mark because we do have a right shoulder. Yesterday it was just potential because we were still up here. And remember I told you we wanted to see impulsive selling on the move down. That is the definition of impulsive selling. A big red candle. Doesn't matter that it's Fed induced. It only helps to complete the pattern. So there it is, your impulsive move down, sell signal come on that, but we also have some minor support, or no, not in minor, I should take that back, it's not at all minor support. So I just want to caution that break of the neckline could prove to be another, well, would prove to be another back test of the top of the August trading range at 77.89. But I told you this before, I expected that if we come down here again, we'll probably fail it because we've already successfully back tested the August trading range after this breakout right here. There's a breakout candle, top of the August trading range. We had one initial test, second test, third test, and I think if we come down again, we'll probably go on down through it. Let's look at ES. ES. Yeah, remember the important levels here were these uptrend lines on the 60-minute charts. I'm going to make that one a little thicker here. Broke down and kind of moved sideways a little because the breakdown wasn't going to go too far to the downside with the Fed coming up. So the market's traded sideways for a few days as expected. And now, boom, we're starting to move impulsively lower. And again, it's the common theme of this video. By the time I get it out to you, if we break with conviction impulsively these recent lows, and like I showed you, a lot of support levels on some key stocks, we probably go lower. Otherwise, if the markets can defend those support levels, we move up, and then you'd have, well, you can see the levels marked on this chart. Right now, the market's trying to figure out which way it wants to go. And to me, it's probably more the technicals are most important. I mean, yes, investors are trying to parse all the data, or I'm sorry, the statements that came out of the Fed meeting, what they may do next, what's going to happen with monetary policy. But technically speaking, I showed you those support levels. If they break, the reason that we're likely to see more downside if we take out today's lows so far is stop loss orders should be. It's only logical that those stocks, those individual stocks, as well as ES for example right here, traders should have stop loss orders below those previous reaction lows. That's a natural support level when you're looking at this chart, a reaction low. Given I have better support down here at 29.69, and we're really close enough right now to this 29.86 or 29.87 level to say that it hasn't gone yet. We're talking less than 3 points on a 3,000 point index. Statistically, that means we're on that level. So we're at support, and by the time I get this video out to you, we'll probably have either rallied off there or moved on down to the next support level. And if so, then that's going to increase the odds that we keep going lower. If we rally here, we can then look for maybe that right shoulder to it kind of be mucked up a little bit, to be honest with you, because of that the way NQ looks. We have that impulsive move down, and yeah, we could shoot back up, but we're going to start to bust the symmetry. You really don't see this often in the formation of a right shoulder. You see the looks more like this: up, down, up, down. That's a typical, and there's a little, I mentioned a mini head and shoulders pattern at the top of there, right there. I pointed that out the other day too. That being your neckline, left shoulder, head, right shoulder, and then break down. So all right, well, we'll see what happens. And other thing I wanted to mention here for you guys is this that NG trade had at least one question on the front page. Someone missed the post yesterday. The entry. We have another objective entry here. We broke down today. We broke down below the trend line, and that 263.90, 2.639 level, and we're back testing. See, that was a support shelf right there, and we're back testing that level now. If we go a little higher, we're just going to back test the trend line. So you have another objective long entry. This is still objective at this point. If it goes much lower, probably not. We still have first target, second target right here, and maybe a third target. We'll see. So I just wanted to point that one out, that you have a still have an objective long entry there on this, or DGAS. We're going to look at DGAS. I should get this video out to you guys, but let's just pull DGAS up since a lot of you trade that one. There it is. Nice bullish falling wedge, breakout, little pull back here to the top of that, to that gap area. This is all resistance right here. So if we can reverse here soon, get another thrust up, that would be bullish. Otherwise, maybe we come in and back test the wedge from below, or from above, I should say, since we already broke out. But again, I just wanted to point that level now. It's still an objective entry. But if you buy degas here, you probably want a higher stop. This was on yesterday's entry, or was it the day before, where I took this one, shorted natural gas in anticipation of a breakout that had yet to occur. I thought the charts were compelling enough that we were going to get it. So again, that stop was based on the entry price and the distance to the second target. Using an attractive risk-reward ratio, you'd want to use a little bit tighter stop if this is your initial entry here, or even if you're scaling in, you add a second lot too. All right, let me get it out to you guys. So that's it. QQQ, like I said, in a bearish technical posture right now. Unless anything changes, it looks to me like we're going to go lower, and give you levels to watch. Back test of those ranges, the August trading ranges, and SPY has much more room to drop to get there, which is why I think I can tell you with almost certainty, if SPY were to back test the August trading range, that's all the way down to 294, QQQ is going to fall back into it. Why? Because that would entail a drop of about 1.65% on SPY just to get there. And if QQQ, which is a higher beta index, tends to fall more, if SPY drops 1.65, Q is probably going to drop 2% or more. See, QQQ only has about 0.63% down to that level. So that would, my guess, it would bring QQQ down here to about the midpoint of the trading range, where I have these levels here, if SPY is coming for a back test. And if that happens, that can also trigger some longer term, more powerful sell signals on the daily chart. So I'm just talking about those as being initial near-term targets right now. If you want to, play a short pullback trade, or if you're bullish and you think the market's going to go to new highs, that's where you'd probably want to step in and buy SPY or QQQ on those levels. All right, I'll get it out to you guys right now. This has been Randy Finney with Right Side of the Chart. Good luck on your trades.